I have the controls or if you do. Good. So this is going to be about a half an hour or so, depending on what we come up with. I'm noticing a change in the marketplace. Maybe it's just ever so slight, but I'm starting to see listings that have been on the market a little longer. And I'm also seeing price adjustments that in some cases, I'm seeing adjustments that are going up as far as new construction, but on resales, I'm starting to see some erosion in the current asking price. And I'm wondering if anybody else is noticing that.
Yeah, completely. I think I've been talking about it for a little bit now. I think my best way to explain it to people is using planets. And I would say that the normal market obviously is ground zero, Earth, and then COVID happened and we took off to the moon. And for the most part, people were priced at the moon, and that made sense. But then there are stragglers, we'll call them, who are priced at Mars. And obviously they're just way overpriced, and they're starting, I think that people are starting to realize just how that they can't get everything that they want, which I think is a good thing, by the way. But I have noticed that. I've noticed quite a lot of changes within our local market and even nationally. I read an article this morning talking about how we have the highest application rate for ARMs than we've had since 2009. So that's a little concerning, but that only matters if the market crashes. And I personally don't think that's going to happen, but I don't think it's good to leverage ARMs. So, but yes, Mark, I have been noticing some changes.
In the luxury market, we oftentimes see that they're cash buyers, although many of them have been financing because their accountant said it was a good thing for them to do. They had the cash available, but they wanted to take advantage of the low interest rates. So now that interest rates have gone back up, I was on a call this morning again and talking about 10-1 ARMs and other strategies to get buyers into properties. And how many of you are running into situations where there is financing involved and the gap is being more and more difficult to cover? Are your buyers able to cover the gap?
Are you talking about luxury only?
No, well, in general, but luxury specifically, yeah.
Luxury specifically. We had a pretty much the exact situation you're talking about. Property on Marco, I believe last month, and the buyer was utilizing financing, but they had a large amount of cash, and per their request, they wanted to write in the contract that they would cover any amount in an appraisal gap. Thankfully, there wasn't an appraisal gap, but they were willing to do that. I would say on the other end of things, we just, what property was that? It was a property up in Fort Myers listed for $900,000, which in our opinion was about $100,000 high, and it just appraised at full price, which is a little concerning. So I don't know. The appraisals are weird. I think there was a time last year where they were facing some what we'll call rebuttaling, against prices. But I think that recently they've been matching them, if we can call it that. I also heard that appraisals are in some areas being done digitally, so they're not even going to the property. They're just doing essentially a virtual appraisal, which blows my mind. So I think there's certain factors within the sub-factors of the market that are changing in various ways, which are obviously affecting the market overall. Appraisals are kind of weird right now.
I'm hearing that people are going to their lenders and saying, can I put in my contract that we're going to do a drive-by appraisal or an electronic appraisal, and we're not going to go in. The lenders are pushing back and saying, no, we can't agree to that, pre-picking a property and pushing it through. But I have heard of buyers wanting to put that in the contract, that they won't do an in-person appraisal.
Wow. That's a little scary. I mean, good for the lenders.
Yeah.
Good for the lender. Where would they get that idea? Like, you want to like
because they heard that somebody else bought a house and they didn't have an in-person appraisal, which comes, you know, from the original lending person, because that first person that they heard the story from was putting, you know, 30% down, 40% down, 50% down, or because the property was so cookie cutter that it was easy to do electronically, or it was easy to do as a drive-by. And the bank was running out of time, because that's what the big, you know, loophole or holdback right now is the appraisals are taking so much time. So someone in their, you know, circle knew someone who didn't have an appraisal done that way, and now everybody wants one.
Wow. Yeah.
Are you seeing
I would say, go ahead, Mark.
I was going to ask, are you seeing any indication of more properties coming on the market or days on market being extended?
Days on market being extended, specifically for those like at that Mars pricing. I think if a property is still priced where it needs to be, it's still moving fast. But for those people who are, there's either something stringently wrong with the property or it's premium priced, it's sitting on the market. But everything else, if it's competitively priced, still getting multiple offers, still competitive offers. It's like we went up to, you know, 350% demand, and we've come back to.
We lost him.
Yeah. Okay. Maybe he'll join us again. Are you seeing anything with respect to your level of clients that you're working with, Diana, since you're unmuted? There's Josh back again.
There you go.
I left. I don't know what happened.
Yeah.
I don't know what you said before I disappeared.
I was going to ask, are you seeing any fluctuation in demand, buyer demand at this point?
I'm seeing, I would call it fluctuation in buyer confidence. We have obviously, much like everybody else, just a large number of buyers looking to do something, but I just don't, there's that confidence is not there. I think everybody's waiting. As every day passes, people are waiting more and more for the crash, and it's weighing a lot on everybody. We had somebody ready to spend $6 million on a house, and then all of a sudden nothing. Can't even. They won't do anything. It's just weird. It's a very strange time for me specifically, I would say. I mean, I don't know if that's across the board for everybody, but definitely for me and the people that we're working with. But that being said, we do have buyers who are like, I'm working on selling a property right now, and I plan, and these are people who are out of state, and they plan to transition here, which is a good thing. But that's, you know, we're looking at 1 to 3 months time frame for that. So there's still some futuristic stuff happening. But I think for local people, Florida natives even, I just have a little bit more disconcern from them, or concern from them.
Yeah, I don't have a lot of experience with the luxury end of the market, but I've had buyers pulling back thinking inventory is going up, and I've had buyers pulling back and saying, with interest rates kind of fluctuating and stock markets kind of fluctuating, we're going to pull back and see what happens to the rest of the world before we go for new construction that's going to, you know, take all of our savings, kind of thing.
Yep, we have that. And I try to have candid conversations with people. I just try to be honest, and not pushy, but there's a fear aspect that I don't think some people can get past. It's interesting. Like I said, it's interesting. There's just this weirdness going on right now. We still have things going on, but there's a subliminal shift to it all. You know, it's something's happening.
Yeah, my other market is New Hampshire, and we just went over the 1,000 active, which we have been struggling with. We've had so little inventory. I know there's no inventory down here, but we've had so little inventory, and we're finally seeing it start to increase a little bit. But everything's been going so quick.
Let me pivot for a moment and ask you, what percentage of your buyers that you're working with, and let's try to stage luxury where we can, are doing virtual showings without seeing the property?
Some are, if they're out of state, they're doing it. I'm up to a gatehouse right now. Give me 1 minute, please.
Yeah.
If Susanna and Christian and Basil want to join in, please unmute. We'd be happy to have your participation, or at least say hello.
Hi, everyone.
Great, thanks for joining us.
Yeah, I've only had a couple people, and they have been in that luxury end willing to do the virtual. But they've also been people that are in no rush. So yeah, I'll do a virtual showing, but I don't need a property today or this week. So I'm just kind of doing it for informational purposes more than for buying purposes.
Folks that will do the virtual showing and then decide that they want to come down and take a look, and they want to write an offer with the right to inspect the property and terminate the contract.
Right, and especially with new construction, you might have a little bit of time to do that kind of thing, to do it virtually and then jump on a plane if you really want to get serious.
I'm not sure how many sellers are in today's hot market are willing to wait for someone to get here and take a look at the property when they have other offers on the table. So it has to be pretty substantial. And even then, I had a buyer that we did the virtual walkthrough the other day. They liked the house, we wrote the offer, and the seller said, nope, I've been burned twice already with people who changed their mind after they came and saw the house. And I'm not going to accept anybody's offer unless they've actually physically seen the house.
Sure. Can understand that.
Yeah, I can't blame the seller for that either. And personally, as we're advising buyers, that's something that we'll advise too, is that this is happening and I think you should also do this. But we expanded to Ohio, and we have an agent up there who has a good amount of people who are looking down here. And I mean, we'll set up virtuals, and it tends to be those properties. What I find people doing is kind of preparing. Like they'll come and they'll see, and they want to look at properties that have been on the market for longer than they should be, and they'll kind of ask for, I don't know, kind of just what's the word? Like a brief on them, and then if they can find a way to get here. It just seems that people would like to move money around in the luxury end. They'd like to diversify some of their portfolios, but they're not super driven to do it like they once were. And I think that's what I'm really seeing specifically on the luxury side of stuff. But that could just be the people I'm talking to. Yeah.
What are you seeing as far as on the list side? What are you seeing anything that other agents and other companies are doing that's different from what you've seen in the past?
Well, if we're going to talk about the recent past, open houses and price reductions, I've seen that in the past 3 months more than the past 2 years.
Starting to see broker open houses.
Yeah, yeah, we're starting to see the effort of the agent again, and I'm not to talk disparagingly about our profession. We have quote unquote had to do a little bit less over the past 2 years, although that's been I would say equally coupled with another kind of work that we didn't really have before. But now it seems like all of that's coming together. So we still have all of that new work that we did with, all of the heightened demand, what comes from that with low supply. But then we have all this other, there's a disconfidence in the public eye right now about real estate professionals, because we don't have to do any work and blah, blah, all that stuff that we're always trying to fight against. But I think now it's more prevalent. And so the agents are, I think, having to work a little bit harder to earn that trust and to earn the listing. I think I've seen that. And we've run into two things recently. And I think it's just people who are trying to let us down easy. But this was with Nick. He lost 2 listings because they said that he was too luxury, which doesn't make any sense to me, because I do most of the luxury on the team with the highest price points. But that's what they told Nick. It was a very strange thing. It didn't make any sense whatsoever, but that was the excuse they gave us for not using our team. And so that was weird. But I think that people kind of have their pick of the litter with real estate agents right now. So I'm not sure. I'm not sure about that.
Well, when we think about, and I know we've got some newer agents on the call, so I commiserate with them in a market like we have at the moment, because you can be competing against very seasoned agents to get listings, and if you're working with buyers, you could be spinning your wheels, showing multiple properties and writing many offers and not succeeding. So if a listing gets 10 offers and only one of them is accepted, that means 9 agents didn't get a contract accepted for their client, and now they're back on the street again looking. So, obviously, if you have a big enough funnel, you're going to have more opportunities to have listing appointments. If your funnel is not very big and you haven't been working on it, you're going to be dependent on finding buyers to fill up your time. And the question is, are you spending time looking for more listings? But I'm finding, and Jeff, thank you for joining us, but I'm finding that I'm sacrificing some of my other opportunities to take care of buyers that I've been working with, and I committed to work with them, so I have to keep my commitment. But the amount of time that it's taking to satisfy all of their needs is incrementally higher than it was in the past. And as we're finding properties that go under contract, that means, well, now we've got to go out and find another one. Jeff, are you seeing anything now that you've joined us, as far as we talked earlier about price adjustments, days on market, number of active listings, pending sales, that sort of thing in the luxury end, that we're starting to notice some signs of some subtle shifts?
Well, Mark, I'm glad you asked that question. I have the stats that I just finished this morning. Sorry to be joining a little late, but if I can share my screen, I have the luxury stats for March compared to March for over $1 million homes. Let me see if I can pull this off.
If you could help Jeff make that share screen, that'd be great.
Can everybody see that okay? Yes?
Yeah. Yes, I can. Thank you.
Okay. So this is somewhat similar to the charts we do for the overall market, but this is focusing on sales over $1 million for the month of March 2022 compared to 2021. And we did this for Collier and Lee, and the differences between Collier and Lee are pretty dramatic. So I'll show you Lee in just a minute, but looking at the median sales price, the condos are up a little bit. The overall price is only up about 7%. And we're spreading this over only 329 total sales. So the mix can skew a little bit if there's an extremely high or, an extreme number down around the millions, but up 7% overall. Single family homes stable at 1 point, just under 2 million, and condos going up. Again, that is relative to the mix of where the condos were and what they sold for, but overall condo prices are up a little bit March over March. The good news though, if you go over days on market, is still coming down 34, but take a look at new listings, over $1 million in Collier, up 33%. That's a good sign. Is up I think 11 or 12% last in the February over February. But now look at pending sales, down a little bit, but look at we're into the mode now where we're building inventory because we had 613 new listings and only 476 pending. So I think we're headed in the right direction as far as inventory goes. Pending is just a little bit lower than last year, but new listings up 33%. So that's a very positive sign for the over $1 million luxury market. If you get on to inventory, again, even though we are way below what we were a year ago, not as far below as some of the other months, but we're still down 37% overall, 30%. But look at the numbers, they're starting to climb. They're 3 months of inventory overall, 3.3 in single family homes, and 2.5. It wasn't too long ago when those numbers were closer to 1. And so it looks like we're building inventory. And obviously we're still under 6 months, so we're still in very much in a seller's market, but the pattern is changing. And if you look at your MLS dashboard every day, you can start to see that the pending and new listing ratio is starting to narrow, and that there are more price decreases than increases. So the market is starting to react to a little additional supply. Some of these properties were on there with, dreaming prices, thinking everything's going up. So I'll take a stab at a much higher price, and those haven't lasted as long. So overall closed sales in Collier down 20% from last March, single family homes down 17%, and condos down 26%. So I'll put these stats out. I could email them or put them out on the Facebook page, but you're welcome to use these to send to your customers. It's kind of a nice snapshot of what's going on each month. Let me go ahead and try the lead.
Jeff, before you do that,
Sure.
let's talk about the closed sales, the last bottom right corner there that you talked about. Do we have a sense that the volume of closed sales is down because of the lack of inventory, or that buyers are not as motivated as they were in the hotter market that we had a year ago?
It's hard to tell, Mark, but generally we've seen lower sales numbers because of the lower inventory numbers. Now, this is the first month that I can remember where we actually built a little bit of inventory, 613 coming on and only 476 going under contract. So the magnitude of those numbers is about half of what it was last month. So even though they're not down at the rate that they were. So one of the things I'm going to try to do is to look at some, not only month over month, year over year, but look at the trend line, starting December, January, and see what the trends are in overall sales and days on market and new listings. So we can start to see what's happening in the market. But clearly the rate that these closed sales are down is less than it was in February and January. So,
and then let's take just a pause for a moment and talk about the 613 new listings and the 476 pending sales. I don't know what the current number of members of NABOR, which would not necessarily include everyone on Marco Island or people in Bonita. How many members would you guess? 8,000?
Yeah, there's 7,000 MLS members in NABOR, and I think about 22,000 overall.
So and we know the 80-20 principle that of those 613 new listings, that some of those are going to be listed with the same agent, or some agents were getting more than one of those listings. But if you just look the number of new listings and the number of agents we have, that's less than 1% of the total number of agents that are getting listings in a million plus.
Right.
And the same thing, it's probably about 0.5% that are on the listing side of the pending sales. And again, taking into account that some of those are going to even be agents that are getting multiple new listings or are getting multiple sales in the same month period. So when we talk about differentiating ourselves and positioning ourselves in the market, we have to think about how do we compete with that 0.5% or that 1% of the marketplace, and benchmarking ourselves not only as a company but as individual agents to see how are we measuring up, not necessarily on our own individual sales, but on our efforts to compete with those agents.
Overall, the market center is up almost 10% in listings over last year. So I believe that that's an indication that we're gaining some market share, even though the unit volume is down and the contracts written volume is down. Those are signs of how much inventory is out there. But if we're increasing, 10% over last year, that means which was the best year, excuse me, that we've ever tracked in real estate. It's a good sign that we're gaining market share. And I didn't break that. We need to break that down into, how many are a million and over and how many are under a million. But it's still a good sign that the market center is gaining market share by increasing the listings volumes over last year.
Right. And then the other thing that comes to mind is, are we getting luxury listings across the county, or are we at all geographically focused in any particular area? So Josh mentioned, working with people on Marco Island. We've got agents on the call on Marco Island, and Jeff, you're probably more aware than any of us as to the activity on Marco compared to Naples.
Well, I think we've taken like almost 70 listings in I can look that up, but we've taken a lot more listings in Naples than we have in Marco. But again, your question is where were they and what was their volume? And I don't have that data. I can certainly get it, but I don't have it at this point. But I'll try to do some work on those questions, because the data's in there. It's just a matter of pulling it out.
And then we can also have a conversation about collaboration. It's what can we collectively be doing to help one another succeed in this market.
Absolutely.
You want to go on to the lead?
Yeah, you want to, let's let me stop this share and we'll go to Lee County. Oh, I think I have to share it first, Jeff. Share screen, Lee County. There we go. Can everybody see that okay?
Not yet. There it goes. Yeah.
Okay, so there's a dramatically different results in Lee County than Collier County. And one of them is to take a look at the difference in the overall median prices and single family home prices and condo prices that are compared to last year. So clearly, there's more volume in Lee County in terms of units, and therefore there's more, not so much in pure unit sales, but in pure number of available $1 million homes. So taking a look at that, you can see that if you jump down to the bottom right, you can see overall sales of $1 million homes went up substantially in Lee County, as opposed to being down in Collier County. And notice the difference in the pricing. So we obviously are seeing some price changes. We're seeing some activity that's stimulated by those price changes. And you take a look at the days on market is still around 40 But again, we put 93% more listings into the market this year than last year. And we put more pendings. But again, when you see the pending to sales ratio start to narrow and even increase on the listing side, you know we're building some inventory, which is meaning more choices for buyers, probably at better prices. And look at the months of supply. We're up to 3.4 overall, 3.2 in single family and 2.3 in condos. So, you know, even though those numbers are down over last year, they're still higher than they have been for quite a while. So again, the picture in Lee County is quite a bit different than in Collier County. We're seeing increasing sales, decreasing prices, and more inventory, more choices. So it occurs to me that the decrease in prices as a result of more inventory getting on the market and people having to adjust their I wish prices to what their real estate professionals are advising them and probably did in the first place.
Another thought that pops in my mind, it's not going to be reflected in this, but when working with buyers, I'm noticing that cooperating or co-broke is declining on average. I don't know that there's any, I know we have two different market centers here, so I'm being cautious because we don't have a standard or we don't have a fixed compensation, but I'm noticing across the board, both in Collier and Lee counties, that cooperating broker compensation is not as high as it was in the past.
Yeah, in looking at the contracts that come in for compliance, I'm seeing that.
Might be partly driven by the time that it takes to sell a property is less. And so sellers don't feel that they need to offer as much, or they feel they can sell it by owner, which we know that that's not necessarily the case. And at the same time, there is a competition to get listings. And so other agents are cutting their commissions in order to get the listing in their portfolio.
I'll try to take a look at in this $1 million segment where we as a market center are progressing relative to the rest of the market. Because I know we do quite a bit of business up in Lee County now. So again, I think these numbers are promising and probably a little more promising than what we saw in Collier. So if you'd like these, I'll put them out on the Facebook page. And if you'd like them emailed to you individually, you know, jonesnaples@kw.com, and I'll be glad to send them back to you so you can share them with your customers.
Thank you, Jeff. Appreciate your effort to put all that together. I know it takes time to do that, and we appreciate your efforts and the insights that you share with us each month.
Well, I got it down to a science. It doesn't take that long. Like I said, the thing that I'm wanting to do is now to start looking at what the trends in the market have been since December, let's say, or maybe a little bit further back, last 6 months, and see what's happening to the various stats, because I think that may be more revealing than comparing our numbers to last year, which was a phenomenal year.
Right. Okay. Diana, Rosemond, do anybody else want to ask Jeff a question before we conclude our call? Rita, Susanna, Christian?
No, nothing. Thank you, Jeff, for the information.
No problem. I think it's helpful to share that with your customers. You're working into the luxury segment. That's a pretty nice, actually, it has the luxury colors and fonts and all that. So you can feel free to share that with your customers. And if you're looking to be more active in that segment of the market, of course, this is a little bit different than the overall stats. So
thank you, Jeff.
Use them for good business. Hi, Rita.
Hi. I would like to have those slides.
Sure.
If you wouldn't mind sending them to me.
Yeah, no problem.
Thank you. Thank you, Mark.
touched on something there that's important. If you want to position yourself as the luxury expert, then posting that kind of graphic and putting commentary along with it, or suggesting that people contact you about specific questions they might have about the luxury market. And then I would say the next, going hand in hand with that, you can't simply rely on Jeff's graphic once a month. If you're going to be the expert, you need to look at the daily hot sheet and look at the properties over $1 million and see what's happening. How many, pay attention to where are the new listings. Did you know that there was a new listing if you're in Naples and Port Royal, for example, or there's a beachfront condo in Bay Colony that came on the market, or one that went pending? Because people are going to be asking you those kinds of questions. And it very well may be that they live in one of those communities and they want to know the information. So it's kind of a dilemma when the customer knows more about the market than you do. And that's your challenge, is to take a look at the hot sheet, click on the link for those new listings. Is it a home that's been renovated, or is it one in need of renovation? Is it occupied, or is it vacant? So is there an open house schedule? And is that an opportunity for you to go to an open house and see the property? Because it's much better in the future when you go on listing appointments, and let's say you're farming Pelican Bay and there's homes, condos, not even homes, starting at $1 million, and or single family homes, several $1 million. And if they're doing an open house, or as we talked earlier, maybe even a broker open, have you gone by there to take a look at it? So the next time a listing opportunity comes up, you're able to say, oh yeah, I saw that property down the street. It had a great pool area, or it needed work. And so it's not simply data that you're talking about. It's actual experience that you have understanding what's happening in the local market. Hi, Matthew. It's good to see you. Okay, is there anybody who has any other questions that you'd like to cover? We do have, I believe, another call next Friday. We're the first and last Friday of each month. We're also going to, in the future, probably maybe at the end of May, have a special guest appearing on our call. In the meantime, don't wait if you have questions to ask about either what you're planning to do, or you want information about the local market, or what Keller Williams has to offer in luxury. Don't hesitate to ask your team leader, any of us on the call, Jeff included, for help or guidance, because we're here to support one another. Well, thank you all for being here, and I look forward to seeing you next Friday.
Everybody have a great weekend.
Thanks,
Thank you,
guys.
you too.
Thank you,
Thank you,
guys.
Mark.
Appreciate it.
Thank you, Mark.
Bye now.
Bye-bye.